On Tuesday, stock investors again expressed risk aversion. The benchmark stock indexes printed multi-month lows as expected. Today, investors are dispelling fears, so the stock indexes are regaining their footing. Still, the market sentiment remains shaky. Investors want to play safe, awaiting the key events on Thursday and Friday. US stocks fell yesterday because poor economic data revived concerns about recession, the Fed's intention to keep interest rates at elevated levels, and a looming shutdown. The Dow Jones tumbled by 1.14% yesterday, the Nasdaq slumped by 1.57%, and the S&P 500 lost 1.47% to close at 4,273 points. The major stock indexes regained some optimism in the New York pre-market. They rebounded from their lows. Futures on the stock indexes grew by 0.3 and 0.5%. The S&P 500 is expected to trade in the intraday corridor between 4,270 and 4,310 points. The benchmark indexes plunged by more than 1% yesterday because yields of 10-year treasuries settled at multi-year highs. Besides, macroeconomic data revealed cause for concern. In a separate report, new home sales contracted by 8.7% in August and months, falling short of expectations. At the same time, home prices extended their growth. Amid such fundamentals, the Dow Jones logged the steepest fall since March. The S&P 500 and the Nasdaq fell to the lowest levels since June. The S&P is on a track to the loss of more than 5% in September. Investors are alarmed by the likelihood of a partial shutdown of the government before the weekend. Rating agency Moody's warned that it would hurt the creditworthiness of the country. Yields of 10-year treasuries jumped to a 16-year high after the Fed's hawkish forecast of interest rates unveiled last week. Such prospects inflicted losses on high-tech stocks sensitive to high interest rates. The week's index, known as the barometer of fears on Wall Street, closed at the highest level since May 25. On the top of that, the market was braced by a plunge on the Amazon shares. The e-commerce giant sank by 4% after the Federal Trade Commission filed a long-awaited lawsuit against the online retailer. In the economic calendar today, traders found out that US durable goods orders showed unexpected growth. The orders rose by 0.2% on a month in August, having rebounded from a 5.6% fall in July. The indicator defined the consensus of a 0.5% drop. Today, the economic calendar makes a minor impact on market sentiment as investors give priority to the crucial data which is due later this week. The latest remarks by Fed Chairman Jerome Powell at the event in Washington last Thursday could clear up whether the central bank finds it appropriate to update the message delivered by his colleagues this week. Minneapolis Federal Reserve President Neil Kashkari also wrote in an essay on Tuesday that there is a 40% chance that Federal Reserve will have to push rates higher to combat stubborn inflation. Besides, investors are anticipating the revised US GDP data and the PCE price index. On the political front, the Senate made some progress in the bipartisan bill to avert the government shutdown, which is due on a Sunday. The House of Representatives tried to forge ahead with a measure supported by the Republicans. The currency market is trading with the same trends as yesterday. The US dollar is holding the upper hand while the euro and the pound sterling are losing ground. The US dollar index was trading at 106.5 before the opening bell, 0.26% up. The intraday corridor for the index is determined between 106.20 and 106.70. The Canadian dollar is trading confidently against its American rival. The USD CAD is trading almost flat at around 1.3514. The instrument is likely to move inside the intraday Canada between 1.3490 and 1.3540. The rapid rally of the US dollar is muted by a recovery in oil prices. Both benchmark rates have jumped by more than $1 on a Wednesday because the market is speculating about tight oil supplies. Markets are worried that the US crude oil inventories at the key Cochin storage facility will fall below minimum operating levels. Such a drop would worsen supply shortages caused by supply cuts from OPEC and its allies. And these tensions set the stage for an ongoing rise in oil prices. The crypto market has perked up today. Popular crypto assets are on the way to previously conquered highs. Bitcoin is trading at $26,660 in the New York pre-market, 1.9% up. Despite a notable recovery, the crypto has got stuck at $26,750. Once this level is surpassed, the door will be open to the landmark level of $27,000. The alternative scenario suggests a decline to $26,200 and $26,000. Despite the fact that the U.S. Securities and Exchange Commission postponed the decision on the two ETFs, the crypto market took the news steadfastly and focused on an alternative to regulation. Dozens of digital asset company executives are meeting with the lawmakers and the employees as part of a massive propaganda campaign orchestrated by Coinbase. Despite the US government crisis, the market seems to be expecting progress in the confrontation between the industry and the Commission. Make profits with the InstaForex, and no matter what trend is unfolding, our team is ready to answer all your questions. And see you online tomorrow.